Welcome back to Bazaar Morning Call. Well, this morning is going to be a slightly ugly picture if you're a bull, but we've been having a smooth run up until now. Nishchal Maheshwari, Chief Executive Officer, Institutional Equities and Advisory at Centrum Broking, joins us now to talk about that. Nishchal, good morning. I wanted your thoughts on, the discussion we were having with the previous guest on the IT space. Most of these IT stocks are down 20-30%, but now the commentary is indicating that perhaps the worst of the margin pressure is behind them. Would you buy any of the IT majors now?
Morning, Sonia. I have been positive on IT for I think a couple of months now, basically because two things. One, obviously, the margin pressure was basically because they had very high attrition rates. And in the last quarter, I think most of the companies said that the peak of the attrition has happened at 27-28%. So a margin should have actually bottomed out last quarter. So I think margins seems to be bottoming out. Are they going up? I don't think so at the moment, basically, because I think the pressure from the sales will also come to have a problem for them. So yes, the margins are bottoming out, and at this point of time, we like all the large cap stocks basically out there: Tech Mahindra, HCL Tech, and Infosys in that order.
Hi, Nishchal. Morning. What about Ambuja Cements? It's moving just one way, upwards. What's your take on it? The open offer price was at around 385 odd. The stock is at 485. All this in a matter of a month. Now they're talking about raising some money. Would you still bet on the stock?
Yes, we have been positive even before once the merger was announced. And obviously, if you remember, Ambuja has been underappreciated in the market, so it always used to trade at a discount. But if you really look at the fundamentals, actually there was really very difference between Shree and Ambuja, but at least there was a 25% valuation difference between Ambuja and Shree. So I think the issue was basically that the earlier management was not keen on growth, and once the new management has come in and they are known for growth, I think that's what people are betting on. The recent raise of money, basically, at the moment, I don't think so they require anything on a organic basis. So this must be something to do with the inorganic space. And Adani's are an ambitious group, and they wouldn't just wait at 70 million tons. So obviously, I think they must be looking to acquire something more, and I think that's what the money is for.
Right. Nishchal, hi. Good morning. Are banks still good for more, in your opinion? This overall chorus that of domestic demand holding up very well and earnings growth looking good. It's got to show up in banking and financial services. Credit growth, in any case, has been picking up. The latest data also shows that. What do you like there?
Morning, Prashant. So I agree with your prognosis there. Basically, very clearly, I think banking space is one because of inflation also. So working capital requirements are there, and then there is strong underlying demand in the economy also. So I think both ways, plus clean balance sheets, very well capitalized balance sheets. So I think all these things are now kicking in for banks after almost a period of 5 years. Our top pick still remains to be the large caps out there. So ICICI, SBI, and HDFC in that order basically is what we like in banks.
Okay, all right. Let's move on then. Initial request you to hold on. We are inviting our first management on the show first. And that's on the theme that we've been discussing, the government's push towards defense Indianization. Today we speak about the company that is benefit supplier of the high precision components as well as subsystems. Mr. Reddy, the Managing Director at MTAR Technologies, joins us. Hi, Mr. Reddy. Thanks so much for joining in. Well, there's this big push that's being talked about. Are you seeing signs of it? Is it evident on the ground? And more importantly, I wanted to ask you that if this opportunity comes to you, what are the maximum peak revenue potential that you can achieve with your current investments? Go ahead.
One thing is the technology that is available with us. We are doing enough R&D to develop and indigenize these systems and various products for Government of India and the defense organizations across the board. Another very important issue is in order to become a defense prime with the latest technologies, a lot of MNCs, because of the Make in India concept, have to approach the companies which are capable in India to join them together to have a jump start in able to achieve this very quickly, which is also very important in order to ensure that we are on track with the indigenization program. So that will be a large benefit for a lot of companies which are capable to have a joint venture with the leading MNCs who are already in the defense sector big time.
Mr. Reddy, but if the opportunity comes to you, then what kind of peak revenues can you do? You've been talking about big growth numbers. I think for this year as well, you're talking about a 25-30% or more than that growth. So at peak levels, what revenue potential can you come up with?
No, it's too early to comment on the numbers, but our growth numbers are not linked to this, defense indigenization program. This is something which will be a added bonus for us, and we need to quantify the numbers. But it'll be huge for sure. There's no second thought about that.
Mr. Reddy, defense is about 20% of your business, right? Sales?
Yeah, it's less than 20%.
It's less than 20%. Just to push on that point, the focus on indigenization is, of course, there. Lately, we picked up, but this is again not confirmed. We had the management of Mazgaon Dock join us yesterday, and I asked them as well. And they said, well, they've heard of it, but they've not seen a direct circular or anything of that sort. That for emergency purchases, defense purchases, the armed forces have been authorized to buy equipment directly from local suppliers, not imports, up to a certain value order. I mean, do these kind of things, I mean, I don't know if you've heard of this. Is that a significant opportunity? Or for you, in the space that you are in, it's largely the, big platforms, projects which will make all the difference?
Yeah, it is a significant opportunity, provided if you're able to deliver it, you're capable of doing it. We are right up there in terms of the technology as well. So obviously, yes, and there's going to be more and more push towards Make in India concept, and that's where the whole difference is coming across right now.
Sir, I wanted to talk a little bit about the clean energy business, which is 53% of your order book. Want to understand how are you enhancing your own manufacturing capabilities in the clean energy space in order to meet the export needs which perhaps could go up, and what is the kind of growth that you're seeing in that vertical?
As I said earlier, we have already planned the expansion requirements for the kind of growth we're looking at for this year and as well as next year. But it is growing pretty rapidly, and we are proactively planning ahead of time in terms of our infrastructure and the requirements needed for that. We are well ahead in terms of what we can achieve in terms of the technology and the implementation programs for clean energy.
Can you give us some numbers, sir? In terms of revenues, I think at the end of FY22, you were sitting at about 200 crores by way of the clean energy vertical. What kind of sustainable growth do you see?
No, as I said, overall, we said 55 to 60% of revenue growth we'll have for this year, including all the segments, where 55% of that or 60% of that would be clean energy in terms of the overall numbers.
Okay, and a couple of more details then. Your margins for the first quarter were at around 27%, but you have indicated that scales up to around 30%. And also your working capital days, I think it was at around 250 days. Where do you see that number settling?
The working capital days, we are looking at reducing our inventory levels. We're more a little bit cautious about the supply chain issues, the COVID-related issues. Slowly, the things are settling down, but not as yet. But we are looking at less than 200 days by end of the year. And margins obviously will settle down at the level of 30% plus minus 100 basis points by end of the year.
Which is what your guidance has been at. Mr. Reddy, for the clean energy business, for Bloom, what are you making for them now? I mean, has the product offering itself expanded? You wanted to scale up to making electrolyzers, etc. Could you give us some sense where you are at?
Yeah, we are adding newer products. Obviously, electrolyzers, we are doing the batch production right now. So even the products which we are doing right now, we are adding one more new product called the latest version of the Yuma version, that hot boxes that we are doing right now. And also a lot of assemblies, key assemblies for them, new products for them. And we've added with a new facility in Adipatla, we're also doing their enclosures and a lot of sheet metal assemblies for them right now. So we have increased our wallet share because we have been qualified for a lot of these in the recent past, the last 1 quarter.
So you've increased your wallet share with Bloom, but are you looking for customer diversification as well? Any new customers on the anvil like Enercon or anyone else?
Yes, already we have orders from GE Renewable. We have orders from Voith, Andrix in the various other clean energy segments as well. And we are in discussion with Enercon, and that should get through. So we're adding a lot more customers, but please understand in fuel cell technology, the kind of volumes they need to achieve, and for MTAR to get involved with other customers in fuel cell, it would take time because they need to come to the level of Bloom in terms of the numbers, what we're looking at for them to look at reliable OEM to work with them.
All right.
So that's where we stand.
All right. Thank you very much, Mr. Reddy. Appreciate you joining in and running us through all of that. It's good speaking with you, sir, and good to have you with us here on the program. So that's MTAR. Initial, of course, is still with us. MTAR is, of course, a smaller defense play. There are, more focused defense plays, which have done extremely well. MTAR, not so much. Initial, I don't know if you have any views on this space. It's a large order ticket size segment, but that also makes it very lumpy and kind of difficult to project. Any thoughts here? And if you have coverage, what do you like in that space?
So my thought on that space is, yes, it is a very promising space given that government is very keen on indigenization. The only issue remains to be, I think I have said on your channel earlier also, basically because only 10% of the government's defense budget actually goes into the newer projects. Remaining almost 75% goes into the regular expenses of salary and upkeep of the troops and all. And another 15% is for the projects which are existing and which have, because these are all multi-year projects. So the allocation to new projects is very small of the total budget. So when we look at a total budget, it may be a huge number, but what really comes to the new project is not very significant. So that's why it has to be a very calibrated thing. I don't think so most of these companies will be able to do more than 10-15% kind of a growth, because that's the kind of money allocation happens every year from the government for them.